Good evening, everybody. I've just arrived after a long flight from Hong Kong, so forgive me. I'm going to talk about the power of crypto. So we know that there is something about crypto that rattles governments, rattles central banks, rattles big financial institutions, because crypto transgresses the traditional boundaries of finance. So as you know, blockchain is dismantling a 5,000-year-old system of money. And what is the proof? The proof is that authoritarian regimes like China and greedy rulers in India are talking about stopping crypto and creating sovereign digital fiat, as if that was possible. Do you even realize the power of the revolutionary technology that you have in your hands? And yet, we are trying to do the old things in old ways, in safe ways, keeping the hierarchies of intermediaries intact and keeping the dominions of power intact. That's not really the vision of Satoshi Nakamoto or the blockchain. So we are seeing that banks and many other financial institutions which seem to be paying lip service to blockchain, if you see any of their white papers and you look hard, you will struggle to find any disruption there. In fact, there is no disruption. And in fact, there is no big innovation in financial markets since the introduction of ATMs exactly 50 years ago to date. And every industry there is a churn, meaning the top 10 players of the industry come to be replaced very regularly. But if you look at financial services and banking, the top 20 players remain the same year after year. And therefore, we see that in banking, the banks are using or conspiring against us by using the blockchain against us and not for us. And I'm going to prove you how that is so. Okay. Sorry. Okay, let's pause here. So, we all hear in the news in financial services that so-and-so bank has announced this blockchain patent, and they have formed this partnership alliance, and so on. But blockchain was never meant for distributed consensus in traditional archaic processes, and it was never meant for permission ledgers, it was never meant for private consortiums, it was never meant for grand alliance partners, which are nothing but new forms of coteries of intermediaries or middlemen. It was not even meant for marginally faster, cheaper, more efficient payments and settlements. Then what was it meant for? It was meant for radically simplifying things, for re-architecting the current infrastructure, systems. It was meant for creating paradigm shifts, and it was meant for eradicating intermediaries altogether and putting the power of decentralization in the hands of people. So centralization is the enemy that blockchain was taking sharp aim at, and we are failing to realize that power. How myopic and how short-sighted can we be? Because banks and financial institutions are never going to deliver this redemption to us. It is for us, people, to take this power of decentralization and get rid of intermediaries and to get this benefit ourselves. So we aim to disrupt Wall Street and create history by disintermediating capital markets, which is $66 trillion USD in size. So if you look at it for perspective, the current crypto economy is $120 billion. And you see it in comparison to Bill Gates' net worth and several other rich people there. Apple's market share at around $700 billion. The entire gold in circulation, which is around 5 trillion. The entire cash economy in circulation. And then you have the stock markets, which is $66 trillion. And who said the stock markets cannot be disrupted by blockchain? And yet, Nobody, not a single person, has aimed to even touch capital markets. Why? Because those who understand blockchain, apart from the blockchain founders themselves, know very well that if they make the public aware of the potential of blockchain in capital markets, they have no place to stay in business. And no one is going to render themselves redundant. So I was privileged to meet Nick Szabo last week in Shanghai at the conference. And I told him, he was presenting about financial smart contracts, and I mentioned to him that he is the only person that I know of, other than myself, who is talking about real decentralization in financial markets. And he agreed with me, and he was actually thrilled about the concept, and he said he wanted to learn more, and he was interested in exploring further. Okay, so what is the problem? I want to ask you, how many of you have dreamt of listing your company on NASDAQ or any other stock exchange? Okay, two? Only two ambitious people here. Everybody else, what are you doing here? Okay. Or how many of you have wished you invested or you had the opportunity to invest in a Google or a Facebook or an Instagram? Anyone? Okay, no one. So we are all idle people here, including myself. Okay. So I think every entrepreneur dreams of listing his company in the public stock market and going public. That means listing your shares on an exchange. But listing your shares on an exchange is a very complicated and challenging process, even for the most accomplished entrepreneurs. Like Mark Zuckerberg had a lot of trouble when Facebook did its IPO. Eric Schmidt and Sergey Brin had a lot of challenges when Google did its IPO. So it's not a simple thing. Not only is it complicated and not simple, but it intimidates the best of the entrepreneurs, and it takes a lot of preparation and so on. And not only that, every time a company goes public, investment banks take 10% of the IPO as fees before the company goes public. And these investment banks, they control the investors, they control your issue price, they control the allocation of shares, they also control the communication with your investors. So what do you, as the value creator, control? Absolutely nothing. You've left the entire control of the IPO process or the process of your company going public in the hands of your investment bank, and you have completely remained outside of the process, which is unforgivable because it's a very emotional moment in the life of your shareholders. And if you take some companies in India which are very famous, like Reliance, for example, a lot of middle-class people became rich for the first time that they were able to get their daughters married because they got shares of Reliance. And it's a very emotional moment for them. And they look forward to attending the annual general meetings for the whole year, you know, to be able to come face-to-face with the promoters like Dhirubhai Ambani, who is a legend, and so on. And you have lost such a great opportunity to come and build an emotional relationship with your shareholder who has really believed in you, who really wants to invest in you, who really wants to be a part of your company and wants to form a relationship with you. And you have given away this relationship to the bank, who is charging 10% of whatever proceeds you make in the IPO. And not only that, these banks serve multiple masters, and therefore you cannot trust the investment bank to have your best interests in mind. So this is really anachronous, especially in current times, where using smart contracts, you can issue securities directly to your shareholders. You can not only issue, but you can also service those securities by distributing dividends and so on. And you can also report performance. You can report to your shareholders how your quarterly performance is and the various announcements and so on. So it's really anachronous in these times to give up this entire control and the process to a third party who does not even have your interests in mind. So that's the problem we solve. And here are the various headlines against banks colluding and almost acting monopolistically to rip off fees, which is costing a lot, not only to the exchequer, but also in terms of productivity, because this is taking away from the capital that is going towards innovation, that is going towards productive growth. So here is a look at the capital markets industry. So if you see any famous industries, like the search industry, for example, or the tech industry, for example, you will hardly find 2-3 competitors and big players. And look at this industry. You have millions of players. You don't even know what each of them do. And I myself am not clear what is the distinction between each of these categories. Like, what does a brokerage do? What does a clearing and settlement do? What does a custodian do? What does a CCP do? And all sorts of abbreviations that I don't even understand. So this is just a reflection of the opacity in this whole process. And look at this theory of opacity. So here I describe in detail how banks can be proven to have conflicts of interest. And several researchers have researched this problem, that in fact, banks are not giving you the best deal, and they have reasons not to do so. So the solution: we are offering a radically simple decentralized architecture in DGCamp, which is the first ever attempt at bringing together the issuers and investors in the issuance of any securities, be it shares, be it bonds, being syndicated loans, or be it even treasuries. So even governments can issue securities. And they can interact and invest directly, completely through smart contracts and with no intermediaries. So remember, disintermediation was the first and the key principle of blockchain. Nothing else. It was not cheaper, faster, more efficient. It was not anonymity. It was not privacy, none of those. It was decentralization. And here is a visual illustration of how this would work. On one side, you have the issuers meaning corporates or governments, like sovereign governments trying to raise money, or individuals or even charities trying to raise capital through shares, through bonds, through loans, and so on. And on the other side, you have investors, which could be institutional investors or retail investors. And they come together and exchange the securities for capital in smart contracts. Just like it happens in an ICO, the difference is these are real securities which are transferred digitally via a smart contract. And you don't require a third party or an intermediary to safeguard this issuance or to service the securities or to report performance and so on. So everything can be done electronically. So the capital markets can completely get rid of intermediaries. And here is one more visual depiction of what all we can do. So you can break down the issuance of securities in 3 phases. One is the pre-issuance phase, where an investment bank typically builds an order book, where it finds demand from institutional investors and determines the optimal issue price. And then the issuance phase, where the investment bank actually issues the securities. It allocates it to certain clients at a predetermined formula. And the third one is the post-issuance phase, where once the securities are issued, you distribute the dividends and coupons or so on. So all of these things can be achieved with smart contracts, and therefore investment banks have no role to play, and they know it too well, but they're pretending that nobody knows, and they don't want to tell you either. I don't know how much time I've got left. I just want to end this with 2008 was the first time we had a revolution when Satoshi Nakamoto introduced unstoppable cash in Bitcoin. And then there was another revolution in 2014 when Vitalik Buterin introduced unstoppable computing by way of Ethereum. And 2018, we want to introduce unstoppable capital by way of DGCamp. So welcome to the future of capital markets. And I want to remind you of one statement made by Wall Street CEO himself, Jamie Dimon, who is the CEO of JP Morgan. He had said, that Silicon Valley is coming to eat our lunch, and this was a few months ago. And yesterday or so, he made a statement saying Bitcoin is a fraud. And I want to pay a tribute to our crypto founders, Satoshi Nakamoto and Vitalik Buterin, by making the Wall Street's prophecy come true, saying Silicon Valley or the blockchain founders or inventors are indeed going to eat the lunch of investment banks. And we want to create history by proving that intermediaries are redundant in investment banks and in capital markets, especially in raising capital. So the benefit of this is any issuer from any geography will be able to access any investor from any corner of the earth and will be able to exchange securities for capital directly. And investors will be able to buy or sell securities from any geography, any amount, any risk profile, and any industry. So this is complete decentralization of both innovation and access to capital, which is the ultimate utopia of what blockchain would promise. This is the true gift and promise of Satoshi Nakamoto, and I want to have the privilege of being the first one to take a direct hit at capital markets. Thank you.